Ladies and gentlemen, good day and welcome to Alkem Laboratories Limited Q4 FY23 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Gupta from Motilal Oswal Financial Services Limited. Thank you, and over to you.
Thank you. Welcome to the 4Q FY23 earnings call of Alkem Laboratories. From the management side, we have Mr. Sandeep Singh, Managing Director, Mr. Rajesh Dubey, CFO, Mr. Amit Gade, President International Business, Mr. Yogesh Kaushal, President Chronic Division, and Mr. Amit Khandelia from the finance team. So over to you, Amit, for the opening remarks.
Thank you, Sumit. Good afternoon, everyone, and thank you for joining us today for Alkem Laboratories Q4 FY23 and full year FY23 earnings call. Earlier during the day, we have released our financial results and investor presentation, and the same are also posted on our website. Hope you have had a chance to look at it. To discuss the business performance and outlook going forward, we have on this call the senior management team of AlphaStreet. Before I proceed with this call, I would like to remind everyone that this call is being recorded and the call transcript will be made available on our website as well. I would also like to add that today's discussion may include forward-looking statements, and same must be viewed in conjunction with the risk that our business faces. After the end, if any of your queries remain unanswered, please feel free to get in touch with me. With this, I would like to hand over the call to Sandeep Singh to present the key highlights of the quarter gone by and strategy going forward. Over to you, Sandeep.
Thank you, Amit. Good afternoon, everyone. I will talk about key operations and strategic highlights and then leave the floor open for Q&A. On the domestic front, during the year, we had done exceptionally well on launch of new products. Contribution of new introductions to our growth was 3.1%, significantly surpassing the industry, which is at 2.3%. We had some very encouraging new launches during the year. We launched Dapanorm Trio in anti-diabetic therapy and are ranked number 1 in this molecule. We had one of the most successful launches of sitagliptin in this year in an extremely crowded market where there are more than 50 players. We rank among the top 5 in this molecule. We also launched Sacuval in January of this year, and which came after Vimada went off patent. We are among the top players in this molecule as well. And when you consider this fact against the background of we not being among the top 25 in cardiac, this is a good achievement. We look forward to carry this momentum of market-beating performance of the domestic franchisee in the following year as well. During the quarter, there was an exceptional item on account of impairment of assets, which has impacted profit before tax to the tune of 103 crores. We have taken a call to discontinue a St. Louis plant, which was meant for controlled substances, due to the structural changes happening in the US market. We understand that our EBITDA margin for the quarter and year is subdued, and we are working towards that. With this, I would like to open the floor for questions and answers. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Mitesh Shah from Nirmal Bang. Please go ahead.
Thanks for taking my question. And my first question is regarding the discontinuation of this plant. What would be the operational benefit because of this, the impairment we have done and the discontinued the plant?
I think there are some financial benefits. I will let our CFO answer that, but Mr. Dubey.
Yeah, but we expect to save our operating expenses to the tune of 100 to 110. But just having your mind, this year entire 100 or 110 crore is not going to come because we may continue this plant for another month or 2.
Okay. So it would be like a 10 months of benefit we'll see this particular year.
8-9 months you can say.
Got it. And with this restructuring, how would we see the margins going forward? Because this was one of the tough years for margins, definitely.
Mr. Dubey, you can.
Yeah. So margin, actually, in fact, in our last call, our MD, he has already given guidance on margin front. So we'll stick to our commitment, and we'll definitely add 200 basis points over what we have right now. So I think we are going to be, and we have to be somewhere close to 16% kind of situation.
Got it. And our other international markets growth remains strong. What would be the reason this quarter, and how would we look at going forward other international market growth?
Mr. Amit Garib, if you can take that, please.
Sure. Thank you. We've been focusing on a few key geographies over the last few years, and that's now kind of paying dividends. Actually, has been paying dividends for last several quarters. So we'll continue on that pathway. As our business reaches a certain size and scale, the percentage growth may come down. And overall, as a company, in any case, we are focusing on quality business and margin business rather than chasing revenue. So you'll notice the business continuing to grow. The rate of growth may come down going forward.
Got it. Thanks. And about the UAs, what about the pricing scenario over there? It would be reduced to a single digit, or still it would be a double digit price erosion for us?
Amit, you could answer that, Amit.
Sandeep, do you want me to? Yes. Okay. Thank you. During the entire fiscal year, the deflation was in double digits for us, and I understand your question is whether it will come down to single digits. In Q4, we saw a bit of an ease on the pricing side, but we continue to have pricing deflation. Now, going forward, will we end up with single digits? I think we are definitely hopeful that it will be single digits for FY24.
Got it. And just last bookkeeping question, what would be the tax rate for 24-25?
We'll be somewhere around 14% kind of effective tax.
So this particular year we closed with the higher tax rate. What would be the reason for that? Around, I think effective tax rate itself is 21%.
In fact, we talked about one exceptional item. There is another exceptional item in that, and that is in tax. So deferred tax assets to the tune of 100 crores. We reversed in this quarter 4 and YTD, March 23. So that is the reason why you see our effective tax rate on higher side. But for next year, we will be 14% or 14.5%.
Got it. Thanks. That is from my end.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thank you for the opportunity. So one question on other expenses. If you exclude R&D expenses, your SG&A expenses is pretty high quarter on quarter as well as year on year. So any specific reason for it, and how do you see ahead in FY24?
So Rashmi, you are very right. Your observation is very correct. And especially quarter 4, it was on higher side because just immediately previous year to this year, our marketing expense, it was muted to certain extent. And we kept on engaging around 1,000 guys every year in last 5 years. So our sales and marketing expense, definitely it was on a higher side. Particularly conference expense, actually first time we got opportunity to have conference in bigger way. That was the reason. But going forward on other expense front, we expect somewhere around 23.5% to 24% kind of situation. And that is really a normal situation in our case. Obviously, this time it is on the higher side.
So you mean to say that other expenses, including the R&D, would be in the range of 23-24%?
You are right.
Okay, for FY24. And then, when you are saying that, there would be a 400 bits improvement in the EBITDA margin, I understand that, we might be seeing some softening in the input cost and the freight has also come down. But what are the other factors that would lead to this kind of expansion in FY24? I mean, if you can just give us 200 basis point, where all we can achieve?
Yes, Divij, you can go.
Yeah. So when we talk 200 basis point, we talk consolidated. Of course, it's not any single lever of addition to ultimate EBITDA margin. Definitely, softening of API price is one of it. And in last call also, managing director he hinted, we are working on so many cost optimization drives. So, we believe we'll be able to achieve our expectation. Then operating leverage is another thing. So, manpower, what we have added, that is going to pay us going forward. And our internal working, it shows us we will be able to achieve 200 basis points.
Okay. And that includes by saving the expenses to nearly 80-90 crores, from this plant, right?
Yes. Yes. You're right.
Okay. Okay. And my second is on India business. What was our trade generic contribution as on FY23? And what was the growth for the entire year? And how do we see ahead in FY24 and 25?
So, see, trade generic contribution to the business is 21% now for the entire year.
Okay. And what was the growth in FY23 in only in trade generics?
It's around 5%.
5%. But and how do we see ahead in FY24-25?
You are talking only trade generic or talking about?
Only trade generics.
Almost similarly.
Similarly. Okay, sir. I have more questions. I'll get back in the queue.
Excuse me. Let me correct myself. Trade generic will be close to double digit.
Close to double digit. Okay, low double digit, you mean?
Yeah.
That would continue to grow in that range only.
Yeah, we are hoping so that will continue to grow in that range.
Okay, sir. I have more questions. I'll get back in the queue.
So, Rafi, just to clarify, you said 400 basis point improvement on EBITDA margin. So, it's not 400 basis point. It's 200 basis point improvement over FY23.
Yeah, so 200 basis point only I asked.
Yeah.
From 14 to 16%.
We understand. Wonderful.
Yeah. Got it, sir.
Thank you. Next question comes from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for the opportunity. So the first one on the plant saving that we have done, would you be able to provide some color as to which line item this 80-90 crores will flow in? And secondly, is there any severance related cost, etc., which is there in this quarter or expected in quarter one?
Yeah, when we say OPEX, actually it will go line by line. So something will go in personal cost, something will go in other expenses. And it has to be all across because we, as per reporting norm, whatever hits we have, it is going to go all across. So let me just correct our understanding. This 100 crore kind of saving is annualized. So this year we expect we be able to save at least for 7-8 months. So accordingly it will come down. So whether it is 60 crore or 70 crore, time will say. But our estimate is for 7 to 8 months.
Correct. And will there be any one-time costs associated with it, like severance, etc.? Because I think in US, we have to pay.
I'm telling you that, factoring that. We're telling you net.
Okay.
Yes.
Okay, 110 is net on an annual basis, and then we are expecting 70-80.
Yes.
Yeah.
Perfect. And I think our employee expense on a quarter-on-quarter basis, I think, has come down a little bit. So is it more, because of the accounting where we would have provided more bonus, etc., incentives earlier or something, or is it something that the base is and we, So this is a new base of 500 crore. Earlier we were around 525 crore, and before that 570.
So there was some rationalization in manpower, in R&D and manufacturing because of the business pressures we have.
Okay, so basically 20 crore is the quarterly saving, and which should continue going forward in your view?
No, it's not that much at all. It must be, like lopsided this quarter because there was a severance pay in the last quarter. So therefore, you're seeing a lumpiness over here. You could see a 10 crore saving because of this every quarter, not more.
Okay. Yeah. Perfect. And lastly, on the trade generics, I think sir said that trade generic is around 21. I think as far as I remember, last year it was around 22, and we have trade generic has grown at double digit, and versus our India business has grown at around 7.8.
No, we didn't say trade generic grew by double digits. We said for next year, for this year that is. The question the lady asked, Mr. Agarwal, was on last year. We grew by single digits over there in trade generic.
Okay, single digits.
Yes.
Perfect. And now we would be more or less in the RX, like whatever prescription business, India business growth, more or less in line with that.
Yeah, maybe a little bit more, but yeah, round about that.
Okay, perfect. I have more questions. I'll get back in with you.
Yes, thank you.
Thank you. Next question comes from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah. Good evening. Thanks for the opportunity. First question on gross margin. So, last few quarters we have talked about US pricing pressure, etc. And so this quarter the US contribution is also lower, but still the gross margin is still muted. So is it got to do with the high raw material prices which has still not come down, or there is more to read into it?
Oh, you're right, Prakash. Actually, material which we procured earlier, ultimately you consumed in this quarter. So, in short, I want to say whatever we sold in this quarter, it was manufactured against material which we procured in earlier quarter when prices were on higher side. And then the second, let's have in our mind this NLEM, it came in quarter 4, and NLEM is also having impact on this gross margin if you are referring quarter one day.
Mm-hmm.
So when you see annual for the year, yes, pricing pressure in US market and depletion in prices there, that is a major contributor. But when you see quarter closely, DPCO, and then higher material cost which we procured in earlier quarter, we consumed in this quarter.
So are we done with using old high-cost inventory, and from first quarter we will be with the low-cost inventory, or how do we think about that?
Even today also we don't see material prices coming in line with pre-COVID level. But PNG kind of material, they have started showing positive trend. So, but I think it takes normally 3 to 4 months because you procure and then you manufacture and then you sell. And then impact is going to come.
So maybe second quarter onwards we will see the raw material price benefit?
Yes, I believe so. The second quarter onwards, it will be getting softening a little bit.
And the second piece you said, the NLEM impact, so we must have taken price hike in April, so that offset should be seen in Q1, or that also we will see from Q2?
Again, when you have material, normally even finished goods also we keep for 1.5 or 2 months. So even though you implement an NLEM or you take fresh batches in the month of April or May, it takes little bit time to get consumed your earlier manufactured, and then your new product is going to go in market. So approximately around 3 months it takes in this entire process. So I think by June we'll be starting of taking advantage of price increase. But again, it will be second quarter when everything is going to come.
Okay, perfect. Understood. And one clarification on the comment made. So earlier we were looking at 15% EBITDA margin. We came at around 14, and we had talked about 200 basis points. So we are talking about 17% EBITDA margin for 24 or 16% EBITDA margin?
16, Prakash, 16.
Okay. Okay, understood. And lastly, on the U.S. sales, so how should we think about it? Do we see the impact due to closure, or the products which were manufactured already outsourced to CROs, or how should we think about U.S. going forward from here?
So sorry, Prakash, I didn't get your question. On what parameter, do you mean, Prakash?
In terms of sales, so we had the exit run rate of, say, $70 million. So with the plant shutting down, do we see some impact of
No, Prakash, because, and I'll let Mr. Amit here elaborate, but this plant was not contributing more than 2-3% to US anyways. Okay. And going forward also, it should not impact. Amit, you have comments, please go ahead, Amit.
No, you're right. And in fact, the contribution was less than 2% on the revenue side. So the revenue loss is very marginal. And overall, we are expecting a small growth in the US business in dollar terms and all.
So growth on a base of fiscal 23.
That's correct. Overall.
Not what's the MR count as on fiscal 23, sir? Field force?
Okay, Yogesh, MR count. MR count as an...
As a company, we are around 12,000 overall as an organization.
12,000 MRs. This is with the managers or just the field?
This is without managers. This is only representatives.
And with the managers, sir?
So around 45% odd is the managers to the representative. All managers put together, right from area manager to the sales heads.
You have to load 45% on 12,000
managers. Yeah.
Okay, that would be a big number.
Sorry?
It is a
big number, yeah.
So 5,000 people, so about 17,000 people we have on the field plus managers.
Absolutely, yeah.
Okay.
At a group level.
Yeah, at a group level, for sure. Okay, I have more questions. I'll join them. Thank you.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. My question is on specialty business, specialty portfolio in India. So obviously you have done very well in anti-diabetic space, but cardiac is something I believe where you are lagging versus the market growth. And if I remember correctly, you mentioned you are planning for some change in strategy, etc. So can you update on a cardiac part, because that again is a big market, and how do you see specialty portfolio going as part of your India business in say next 3 to 5 years?
So you have 2 questions. One is about the cardiac and second is overall specialty. Am I right?
Yes.
Yeah. So see, let me answer first cardiac. I mentioned about slight change in our strategic approach towards cardiology. So we initially were focusing on niche product, I repeat again, because we were focusing too much on anticoagulants and antiplatelets, which are little difficult and niche market. So what we have done in the last quarter is we are focusing more on mass-based cardiologic products, which are your antihypertensives and lipid regulators. So we will be focusing more, and we are seeing results there. Last quarter, the cardiac growth was close to around 1.8, and this quarter it has reached almost 5.5, while the market is growing at 8.5%. So we are almost touching the market growth in cardiology, and this will take little time, but this strategic approach has started yielding results. So this is how the cardiology will be placed. That doesn't mean that we will not focus on niche, but the larger focus will remain on mass products, uses molecule. Overall specialty, yes, diabeto, almost all newer molecules which are going off patent, we are targeting. So we have launched DEPA, Vilda, Theta. So all these are launched. Various combinations will be launched. So and we are currently leading we are among the top 5 in all these categories. So diabetology we are strengthening and we are going strong. We are currently 15th, and we hope that in another 2-3 years we should be among the top 10. In CNS, we are already ranked 7th, and for the month we are among the top 5. So my expectation is, we should consolidate, and CNS in a year or 2 we should be on an annual basis also we should be among the top 5. Dermatology and urology, we are consolidating. We are growing 2x to 2.5x faster than the market. And fifth is our cardiology, where we are almost touching the market growth. And assume maybe 2 quarters more, we should be able to surpass the market.
Okay, so compared to your anti-infective growth, which is major part of your India business right now, once you sort out, say, some of these issues in cardio part, we should assume that specialty will be growing much faster than the acute portfolio?
Yeah, so that is, currently also is happening.
Yeah.
Chronic is currently growing at around 21 to 22%, while acute is growing at around 7 to 8%. So chronic is sustaining a growth level of around 21% versus market of around 10%.
Okay, understood. Related question to in the overall this year, obviously, Sandeep mentioned in his opening remark that contribution from new launches were much better versus your own historical performance and against the market. So, say for 24, how should we look at growth drivers, say volume, price, and new launches for the India part, overall India business?
Yeah, so see, while the industry still shows a muted growth of unit, but we are still very bullish that as a company, we should be able to drive a double-digit unit growth. So we will have major growth drivers this year will be a unit, and a marginal contribution will come from NRV and from the new products. So larger will be volume-driven growth.
Thanks. And my last question is on your R&D. So R&D, obviously, we continue to see uptrend in recent quarters because of your progress in pipeline products, etc. So how should we look at this number in, say, 24 and beyond as a percentage of sales?
5 to 5.5. We have always maintained that. That should be what it will be.
Okay, so it will stay within that status.
It will stay within that range, yeah.
Okay, thank you. I'll get back in the queue.
Thank you. Next question comes from the line of Kunal Randeria from Nuvama. Please go ahead.
Hi, good evening. So I think you mentioned double-digit growth for India in FY24. So I'm just wondering, which therapies do you expect? Because it's unlikely that gastro or pain could repeat the kind of high teens growth that you reported this year. So just wondering where the growth would be coming from.
Yeah, so see, our acute, we said as a company will grow at a double digit, right? At an early double digit, which means around 11 types, 10 to 11%. So we still expect acute to continue to grow at around 8 to 9% growth, and chronic will sustain a growth level of 22% types. So as a company, we will continue to grow at around 10 to 11%.
Okay. Fair enough. And secondly, I still don't completely understand your margin guidance. So I understand the 200 bits and we expect 16% margin. Last time around, it got it to 17%. Now, see, in the last 3 months, I guess you have had some tailwinds from lower input costs, that will benefit you in the coming year. I think freight costs also would have come down, plus the St. Louis plant, where you expect maybe some 50-60 crores savings coming this year. So there have been more tailwinds than headwinds, but still, the absolute margins coming from 17 to 16%. So is the cost of business actually going up, and maybe a normal cost, the savings are really not there?
No, I think, see, first thing, these things don't happen overnight. So obviously we had anticipated St. Louis closure, even when we spoke to you all last time. Though we were not sure when we will do it, but we obviously knew. So all that was factored in when we said it will be a 200 basis point increase. Our RM going down.
Hello? Hello? Hello, this is the operator. Can you hear me? Hello? This is the operator. Can you hear me? Hello, this is the operator. Can you hear me? Since I am not receiving a response from your end, I'm going to have to disconnect your line.